Welcome back to the Cobra Trading Channel, everyone, where we focus on people, passion, and platforms. I'm Alex Bustos, and today we're going to be answering the question, why would you pay for a broker when you have all of these free big box brokers nowadays? Well, I'm going to explain why here. Let's go. First off, in order to get access to the market, there is a barrier of entry, right? There's this imaginary wall here, which in order to get access to this wall, you need a broker, right? Now there's two types of brokers. There's the big box brokers like E-Trade, Fidelity, and so on. And then there's the direct access broker. Broker is going to stand for E-Trade, Fidelity, all of the big box brokers. And direct access is standing for Cobra Trading. Now, when you place a trade through Cobra Trading, you actually get direct access to the market. It goes directly there. But when you place a trade with one of the big box brokers, it actually takes a pit stop and stops here for just a second. And there's two things that could happen. A, it could be traded in-house. What does that mean? It means trader A is selling a stock at $1.50 and trader B is trying to buy a stock at $1.50, so they'll just trade it in-house. And then there's option B, right? What happens is it stops here and then gets sent to the market, and it will make the trade when it benefits the big box broker. In other words, they get a rebate that they can then say it's a free trade. Now, this doesn't happen in a matter of 5-10 minutes. This can happen in a second, 2-3 seconds. It's not very, very long, right? When you're talking relative time. However, when you're trading, this 1 second or 2 second compared to a millisecond just going straight to the market is dramatic, especially if you're a momentum trader or you're a scalper, because you know how valuable it is to get that trade right when you see your signal and not have to wait to get approved or executed through a broker who wants to make sure that they give you that rebate. You want access right now when you see your signal. That is a huge benefit of being able to have direct access to the market through Cobra Trading. So those couple of seconds or that 1 second of delay is going to cost you either missing that trade completely, which means an opportunity cost of missing out on something that could have been a winnable trade, or make you chase it and then make it a very unfavorable outcome for you because you're chasing a stock. And we know what happens when you chase, right? You get a bad entry, therefore your risk reward is completely skewed, and then you can end up losing on what would have been a winnable strategy. Now, speaking of strategies, this is really, really dependent on your style of trading. If you need access right away, if you need to execute when you see your signal, then you want a direct to access broker. But if you are a swing trader maybe, or don't really care about execution, then the other broker might be an option for you as well. But it all depends on you as a trader. So hopefully now you have a better understanding of the difference between big box brokers and direct access when it comes to your trading account. If you have any questions at all, be sure to reach out to us at cobratrading.com. We're happy to answer any questions that you may have. And don't forget, make sure to hit that like, subscribe, and hit the bell so you're notified for future videos. Let's go.